Why startups? Why is that a benefit?
Well, look, the starting point about pensions is to get the best returns for pension savers. And that, we must never move away from that as a fundamental underpin here. The most successful pension funds in the world, usually the Canadian state pension funds, the Aussie Supers, have between 30 and 50% of assets invested in unlisted asset classes of infrastructure, real estate, private credit and private equity. So we need to get the pension system in the UK, of which there's over £4 trillion, more invested in productive assets to give better returns for pension savers. The reason that I particularly focused on late-stage venture capital is, as you've heard earlier, there is good incubator and seed capital in the UK, but often are high-growth companies, and we are brilliant at these high-growth industries of tech, fintech, green and renewable tech, clean tech, biotech, life sciences. We've got 4 of the best 10 universities in the world, 7 of the best 20 universities in the world. But too many of these companies, once they've sort of proved their business model and are looking for accelerator financing, have to go externally for capital. And I want us to marry up that need with an opportunity to get the best returns for our UK pension savers. We love Ontario teachers' pensions, but why should Canadian teachers be benefiting from the incredible entrepreneurial spirit in the UK?
So it's about allocating British pensioners' funds or future pensioners' funds to a UK ecosystem as well, because will they not therefore be able to access private markets outside of the United Kingdom?
They will, absolutely. And I think the idea here is that it's not just the what about allocating 5% of DC pension funds, which, we think by 2030, just because DC pensions are growing by 10% per annum, we're going to have between £1 trillion and £1.3 trillion in DC pensions. So 5% is about £50 billion. I'd like a significant chunk of that to be allocated to a future growth fund, which has the advantage as a collective investment fund of being able to get the enormous diversification of risk that actually you need when you're talking about companies at that early stage.
Can you give us a context as to why the UK has been reticent, psychologically, culturally, to invest in that way from its pensions funds?
I think it's a combination of things. Part of it is cultural. I think since 2008 we've been pretty risk averse as a financial ecosystem. The regulators have been given a primary objective of making sure we didn't have a repeat of that. We looked after customers' interests, quite right. But we need to give them, and we have now given them, a secondary objective of competitiveness and growth, so they have another lens through which to look at these things. But I think one of the biggest issues is that we've not had that sort of culture, particularly, of investing in late-stage venture capital. And North America has really stolen a march on us in that regard. So we get a lot of our companies getting on a plane, going to the West Coast and looking to raise money over there. And they can continue to do that, and they should continue to do that. We should still get lots of international capital coming into the UK, but I want us to get some UK money working too. 50 billion is a good start.
It's interesting that, of course, this comes hot on the heels of Arm, a UK-based company listing in the US for deeper capital reasons. Also, in a global context of the technology sector having been pretty hard hit in the rise of yields, borrowing costs going higher, growthier names have been hurt unless you're AI-focused in some way. What has been the conversations like with the pension industry, of which you're somewhat a part? We're not on sort of loan to the City of London. What have they been like? Where's the reticence been in this context?
Well, there hasn't really been much reticence. 9 of the largest players, representing 65% of the DC market, have been supportive of this and signed the Mansion House Compact in early July, when the Chancellor was at Mansion House and was able to announce this. So I think there are very big players like Aviva, L&G, M&G, who've got big asset management capability, including in the private equity sector, who would like to say, well, yeah, we're happy to sign the Mansion House Compact, but we think we can do that ourselves. There are lots of others, because we have a very, very broadly diversified pension system with lots of small players. They need a collective investment fund that they can use as the vehicle through which to invest in this asset class. But I think by creating a £50 billion war chest, if you like, and with much of this going into a future growth fund, we'll be able to change the culture. We'll be able to develop a real ecosystem, it's not just about capital, it's about making sure that we've got really strong non-executive directors and mentors who can help these companies, and also improve the equity research that we write on tech companies. I'd say there's actually a significant differential at the moment in the quality of tech research that happens in the US and in the UK. So this is not just a silver bullet. We've got to change the culture, and there's a lot of work that's involved in this.
Note to the sell side. I'm interested, just to end it, Lord Mayor, on the idea of whether this money automatically goes to British-based venture capital companies, or are we going to suddenly see a flock of SF-based funds come in and want to make the most of this pool of capital?
I think we, again, if you come back to this first mover, which is that we have the desire to deliver the very best possible returns for pension savers. Therefore, we need to make sure that they have a diverse and not just UK, but also international exposure too. But we have got such good companies. The fact of it is the most sophisticated investors in the world come here to invest in the best of British. So let's invest alongside those sophisticated investors and deliver great returns to pension savers and get some of these companies listing in the UK. In 5 years' time, if we're successful with the Mansion House Compact and what we're doing with DC pensions, we'll have £5 billion, £10 billion, £20 billion tech companies in the FTSE 100.